Alrighty. It'd be cool to see you start with an empty chart and to populate it with a projection. Like start on a random historical day and go from there. Tomorrow at 11. Sounds great. So I just opened a new chart, named it Kevin Demo. You can see in the object tree there's nothing on it. It is completely blank. So let's go ahead and find ourselves a random date. Hi, Rolo. I think he wants to play. He hears me talking, and he thinks I'm talking to him. Don't you, buddy? You think I'm talking to you? Oh, bring me that toy. Yeah. Go ahead. Oh, I don't want to select a random bar. Select a random date. Or not select bar. So random bar is fine. All right, there we go. September 17th. That was just a few days ago. How about we go farther back, huh? Let's do this on a 5-minute time frame. Let's do random bar. December 2024. Okay, sure. Let's do that. Let's look on a 4-hour time frame. Let's kind of get our larger picture here. Okay. We got ourselves an uptrend. Let's go back to a 1 day. All right. So we've got a retest here. Right there. Now this right here is about the time when you break past the distribution phase. So what I would do here is actually I need to go on a lower time frame just because I have this thing set a certain way. Let's go back to like 5 minutes. I want to draw this. Then I'm going to change it to AMD3. Okay. Then I'm going to delete it. That way, that's the default. All right. Okay. Let's go back to 1 day. All right. So at this point, we've got this line here. Now, when the market goes down here, this is manipulation, right? Getting people to sell. And then this right here is the distribution leg. Now, it's not like this is exactly where manipulation starts. It could have started here or here, right? It's not that this peak right here is the exact moment manipulation phase started. Because it's fractal, so within the manipulation phase, this will start, but this first part right here, consolidation, could be the beginning of the manipulation phase, and then the distribution could be right over through here. So it's I'm going to draw some Fibonacci time cycles. All right. And we'll just kind of play with this a little bit. So what I want to do is get it so we basically got, what I'm trying to do is line it up so that way manipulation has a little bit of accumulation in front of it, right? So like consolidation that we see right here, right? And then the manipulation kicks in, right? Now, if you want to see like inside what this would look like inside here, like that. Something like that. So like in the beginning of it, you have an accumulation phase. That's where they can start selling their longs, and then going into short positions. And then once they've got that done, it doesn't necessarily need to take this whole time, right? Because I mean, it's fractal. You could even then break this one down farther, right? I mean, you can go. It's not like a super fixed thing, but it's a general guideline just to help understand the phase that you're in. So right here, you've got manipulation, and then over here, you've got distribution. And again, like in the beginning of distribution, you're going to have an accumulation phase. So you see it's just kind of going sideways right here. That's perfectly fine. I'm not saying these are perfect, perfectly laid out either. I just kind of drag this. But if we put this here, what you want to do is you want to line it up. The distribution phase ends when the price, generally speaking, it ends. I didn't read this anywhere. I just kind of, this is what I figured out. It ends when the price reaches the previous high. So right here, that's the end of distribution. That's how I know where it ends, right? Right there. And then if we were to look inside this, we've got this. So we see right here, we've got an accumulation period. It's just kind of going sideways. It is, starting to trend up. We got a higher high, but for the most part, like we haven't made new highs right here it's just kind of sideways. We're still below the highs here. We're just moving sideways. Even in the beginning of this, we're still sideways. And then manipulation and distribution are both directional times. It's right here. We were going down, so this kind of like the flip. We're going up. It's actually going back down now, and then it completes the up move, and we're back up here. So like the delete this. From here to here is the uptrend, and then I'm saying you can break it down as much as you want. It's like the distribution leg, for instance. This whole thing is distribution, but then like in here, you could break this down even farther, right? Accumulation, da da da, and then distribution right here at the end. Get that lined up right here. Boom. That's the up leg. So you can break it down as much as you want. I'm just going to do this. I just want to understand where the cycle's at. And this is accumulation. You're like, but that's an up leg. Wouldn't that be distribution? Yes. The nature of it is that they're all nested. So like this is a whole nother, there's another manipulation and distribution cycle within here. Every accumulation is a manipulation and distribution cycle. They're all nested. So another way you can draw it from here is that this whole cycle is an accumulation cycle on a higher time frame. So see how that like this is basically a sideways movement, right? So on a higher time frame, this is an accumulation. So this process just to help you get your bearing. Now we don't need to look at some super high time frame over years right now. We just want to see our immediate time frame. So I'm going to go ahead and delete this one here. Whatever that was, I was just doing there. Oh yeah. So like at a higher context, this is a manipulation. So this upward manipulation would be signaling that in June 2025 there'll be some downward activity or something. So that's that. I'm gonna get rid of that. I don't need that right now. What we want right now is to just do a back-to-back type thing. So we're going to put this We can get rid of this now that we see like where that's lined. I was just using that to line this up. Now we're gonna put another one behind there. Because they can go back to back, but they can also, like I just showed you, they can envelop each other. Where the manipulation and distribution cycle are an accumulation. So we'll come over here, put this back to back right there. And now we have our accumulation cycle. So we see like prices going up and down and up and down and up and down. It kind of extends distribution, but it's more choppy. Like the price can come back down again and again. It's an annoying time to trade in. Like see right over here, like a bunch of like big. I mean, it can do that whenever, but things get a lot more directional. Like you get a lot more like this stuff right here, where it's like super directional for how long was this? Like you get a lot more like super directional stuff for the most part. Like right here, you get this big long leg right there, there, here, whoop, 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 especially near the end, right? And you do get one here, but then you get a whole lot of down. And you get like a few days there and then some down, and it's like, it is what it is. Just helps to know the context, right? If you're getting a lot of ups and downs, like knowing what cycle you're in, it's part of the roadmap, right? You kind of got to know where you are. So within this, what stage are we in? I'm hoping we're in the last stage. We are. Okay. This is the more directional stage. So that's good to know. And we've been pulling back here. And there was a day here that really wicked down, wiped up a bunch of liquidity. So the fact that this is falling here, even though this likely took out all the liquidity, tells me that the price is going to fall past this. Because this wick right here already snagged up all the liquidity down to this level. So that means this is going to fall past that. So it's going to probably snag the liquidity right here and maybe even lower, but definitely here, right? So we're definitely going down that far. I don't see any reason why they wouldn't go that far on a pullback, right? I mean, they're not just going to come down here and not get liquidity. I mean, otherwise, why didn't they just stop back here, right? They can just get the liquidity from this wick, and then I suppose this one here. But then that's like 21,600 is the price. If they're dropping that far, why not drop another 100 something points? I don't know. So I mean, it's possible they only come down here. That's possible. It's possible. We'll put that as one target right there. And this is our second target. These two are really close, 469 and then 433. So they're not going to go for this one and then not go for this one. So I'm going to put this as first target, as a second target. All right, now let's do some Fibonacci's. Right here, if we project the high of this, say, okay, this leg right here, how high is it going to go? Right. We got our targets here. Boom, boom, boom. These are our first three that we would have been aiming for. It actually came up, almost extended to 200. Now 200 seems like a weird number for that, so we're not going to look at that. But we are going to just put these here for these levels. And then we're also going to extend out this whole thing. We're going to say like this big recession or whatever the hell this was. Now look at the target. 127. That's how high it went up. So this is actually getting near the top of what's possible. Um, Now there's, I'm going to tell you, I do not know. I don't know what happened here. 2024. Wait, this is 2025 right now. Is this the beginning? No, the Trump didn't make his announcement until early this year. So it's probably going to bounce back up. And it's not fair. It's not fair. I know what's going to happen. um, I think it bounces up because it doesn't actually fall until like what, January, February, like around February, right? Yeah, it feels like cheating now. Now that I just realized what's going on. Um, but anyways, I'm gonna continue for now. I can go back and select another date, but I just did all this. Uh, right here we extend this up. I'd say our second target would be up here, right at 141. Um, that's the ultimate second target if we can hit it from like a macro perspective. Now, if we come all the way down to this wick right here, actually this is the peakity peak right there, and then that would put the second target actually up here. So because that actually was like a perfect target, I'm going to put that there. And then I'll put that for our second target. Now, in terms of just like an extension, uh, like we can look at these moves, like each of these moves, we can say like what's, like we want to plot the path to um to get up here. Like you see up here, this is a 261 extension from this swing, um, which is typically a sign of exhaustion when you do that. So like right here, you notice this is like kind of sideways right here. This is all sideways, right? So we think of this also like, again, I said it's all fractal accumulation, manipulation, distribution type stuff. So um, if we look at this as the accumulation, this right here, you know, manipulation. Oh, there's a breakout, right? People buy into the breakout, they get trapped up here, and then they drop it off, right? So then they can fill a huge position here and then distribute upwards. Um, so it's not all. You can find these patterns all over the place. Um, so even through here, and this is, you know, an accumulation phase, but even within it, you know, you can find more accumulation. So this is a manipulation window here. Inside this right here, what we got accumulation. Like in here, I could do this again. Like in this one, accumulate, manipulate. You make people think it's bearish market, and then you trick them. Haha, I got you. Boom. And now they're trapped at the bottom. And then distribution, you really push up to the top. And then after distribution is accumulation. So it's all fun and games. Let's see. So here we got, what is this one? Oh, there's a breakdown inside this accumulation leg. So we're in the distribution phase of it. Boop, 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 boop. Let's see. So the accumulation ends here. Sometime around here. Is that in line with this? Yes, this one, yeah, that lines up too. Like over here, you got like this high, like I said, on all kinds of different time frames. Boom, boom. So we drag this down so the high lines up there. We can move this over right there. And this is a much higher time frame. This is a huge one. Let's find within this. Each one of these is like also its own cycle. I'm gonna make these into smaller cycles because these are like really big to work with. Um, so let's see. So right here, this looks like an accumulation. So if we like do this sort of like in reverse type thing, yeah, accumulation, manipulation, distribution. This doesn't quite come. Oh, I mean right click. We got accumulation here. Manipulation and distribution. Yeah, that actually looks really good. We'll get rid of that one. All right, so here's accumulation, here's manipulation, and then distribution up through here. So that lines up pretty well. And then inside here, you've got, I said every accumulation is also a manipulation and a distribution. So it would be like this. Here's your manipulation, and then there's distribution. And then there's accumulation, right? so, so there's like example of a cycle, which means that after we break even here, we're into another cycle of accumulation. Where was it? Right here is this word in. So we enter into another cycle of accumulation. I don't know how long this lasts. Let's go back and just grab the most recent cycle. We'll just make a copy of that. All right, so if we do that, we see that we're going to enter into manipulation in January of 2025. That does sound familiar. All right. Now I don't know how far this drops, what day it comes back. So yes, I know there's a crash around here somewhere. Um, but let's figure this out. So here's kind of like our sideways action, right? We're gonna have this like more or less in a range for accumulation. We've got a low and we've got a high. So there we go. Um, I'm guessing we're gonna stay in this range. I don't know if we'll come all the way back down here, but we're gonna look for our reversal signs. Let's step forward. No, let's go into the 4-hour chart now. So this right here, I'm going to mark this as manipulate accumulation template, AMD accumulation. I'm going to say put this at the bottom. Or at, you can do it at the top. Oop, that up the top. Not the horizontal line. The box. Give me the box. Put it up at the top. Okay. And then how about on the left? No. I don't want it intersecting with price. Put it like top left. Yeah, that'll work. Top left. Okay, there we go. All right, let's get another box. We'll put it over here. Bring it in here. Right click, template, manipulation. We'll get another box. Put it over here. Right click, template, distribution. And we'll drag that right to the edge of this dotted line where we extended it to. Right there. Okay, so there's the cycle. Now we gotta fill these out. So we come back here, level that out. I don't know, like the thing looking crooked. This kind of retested that. So like I said, every manipulation and distribution is an accumulation on a higher time frame. So like when this breaks right here, this is accumulation over here. So we've gone up and down once, we've gone up. So if this is a higher time frame accumulation, right? And that means that after we broke even right here, after the break even period, we entered into accumulation. And I mean, look how big this time frame is. It's massive. So like at this scale, an accumulation is large. If this is the size of, I mean, here, an accumulation on this scale is, let's say, about that big. So let's plot that out. So accumulation. About it's like 2 whole cycles. Wow. Okay. Sure. Let's go with that. So that means this is likely to come all the way down to here. That's a manipulation. Or it can come all the way down to there. And if that's going all the way down to there, this needs to be able to come up from there. Which means that the next accumulation, oh my goodness, can I click a box or not? Is going to be the handoff, right? So once it breaks even from whatever the high is here, like whatever the high is here, maybe it goes higher, I don't know. It'll come down and then accumulation distribution doesn't end um, until we reach that high. So then we've got the handoff into the next phase of accumulation. All right. Yeah. So now over here, like this is just, oh my gosh. Actually, I'm gonna drop. I'm just gonna copy this box. because this is like its own micro accumulation. You know, this is like the mega accumulation, this whole thing, really. But I'm not. Hold on, scooch. I'm not gonna draw that out. And then the accumulation is what begins like the next leg or whatever you want to call it. When does this go till? September 2025. Yeah, so like now apparently. These are estimates, but okay. So we've got our initial map here. We know what phase we're in. Now let's zoom in to a 4-hour chart and look at what's going on here. Okay. So yeah, we were talking about the liquidity sweeps. It's probably going to come down to this level before it bounces. So I would say that just from the looks of it, we're bearish in nature at the 4-hour level. We're currently in the middle of a trading day because this black area is trading day, so it's Tuesday, Wednesday. All right, so we'll drop down to a 1-hour time frame. Okay, I'm gonna make this background like more translucent because it's kind of annoying how bright that is. So I'm gonna set this to like 4% or 5%. Yeah. Oh, that's way better, 5%. Okay. Yeah, that's so much better. And then I'm going to go ahead and lock that so I don't accidentally drag it around. Okay, so we got that. Let's drop down to a 15-minute chart. All right, so what I see here is we're in the pre-market. We've got, I've got some, let's go to, I'm going to draw this real quick. I've got one where I preset my cash macros 2:30 to 10. So what I do is I get this one, I drag it to 2:30 a.m. I drag this one to 10 a.m. and this one goes to 2:30 a.m. like that. And now this is set 1900 hours. So now I can see like where we are in the day just by these colors, right? So it just kind of breaks down the day into these like little micro or macro ranges, whatever you want to call them. And we're already out into 6 o'clock the next day. So that's kind of pointless. Let's just move this over to 1900 hours on the next day. So it's a little more useful. Now from here to here, this is London. Sorry, this is Asia's session. So I'm going to go click play. We'll let Asia develop. Okay. Now we're getting into London session now. So London session just swept the liquidity from Asian session, their sell side, their buy side liquidity. So we'll just step through bar by bar here. I want to see what they do. So this section right here is London session, and then from here to here is a joint London and US session. This is London and New York. And let's go ahead and drop this down to 5 minutes. Oh, 15 minutes should be fine. So over here, we can see that we're sweeping up this liquidity here. Boom, 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 boom. We're sweeping up all this liquidity. Swept up a little bit more, and then we drop back down. The fact that we swept like all the liquidity up to this point right here Um, like they're not just going to stop there, right? They're going to sweep it all the way to the top. So let's call this a profit target, and then put this up to the top. Now, once they get to the top, now they're sweeping the top side liquidity because they want to sell, right? That tells you they want to sell. They want to go bearish on the day, but they've swept all this liquidity, and I mean, maybe that's all they need. It's possible that's all they need. But I mean, they came this far. They're probably going to go take it all. So, right down here is where they went long from. Right here, like it expanded, boom, 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 boom. Now, trading long from here with a stop down here is kind of stupid. If we were to go long from here, like that stop and the target is insane. Who would do that, right? That's a 0.44 risk to reward ratio. You don't want to do that. You need a safe place to put your stop loss. So you could probably put it down here. 1-to-1 is not something I generally do. But it is, as long as you win at least 50%, it's fine. But I like to go for 3-to-1. So for me, I'd be looking for a 3-to-1 trade. So for this to be 3-to-1, the stop would have to be really close, right? Or the price needs to drop before the market opens. And I think there's probably a chance that'll happen. So what I want to do here is say, okay, so they want to go short. Let's see, they're building this position, going short here. They used this to build the long position. Now they're using their long position to build the short position. Okay, so right here, 50% is right here. So I'm going to put a horizontal line. I'm going to delete the fib, and I'm going to change this horizontal line to my 50% pullback. All right. So we already saw right here, it wicked down to 50% and got rejected. That's a good sign. It means they're still bullish right now, which gives us a really good chance of hitting this profit target. Since we already got this rejection here, I would be looking for the market to come back down this way, maybe at the open, which would be, here around 9:30 to 10, somewhere around here. Have the market shoot up and hit that target. Now that is, how many points is that? How far is that? 72 points. That's doable. But something that's, what they really like to do is they like to screw people over and like trick them and all that shit. So what they'll probably do is actually open the market somewhere in here, and then that way they have room to go down and make people think the market's bearish because we were bearish yesterday. We're gonna be bearish today, right? So like there's a good chance they'll open somewhere around here. So that way they can go like that, and then they can snag all those people that are clicking sell are selling into their current buy position, right? And that's what they want. They want to build their buy position because they haven't reached their target yet. Now, what is their target? Their target is either to just hit this and flip, or it's to go all the way up here. So let's put a second profit target. Oh my goodness. Right? And then a third profit target. So those are our profit targets. This is the easy one right here. Once you hit this, the price is going to bounce down. Okay. So there we go. I think the price is going to open up somewhere in the middle here. It's going to drop down, and then they'll use all those buys to I mean, all those people clicking sell are going to fill their positions, and then they'll bounce the price back up, and then it'll come up here. At that point, it could push past it, but it's probably, because this is happening so quick, all within 30 minutes, like whipsawing around, it's probably going to pull back. Um, and if you want to know how far it's going to pull back, we would use Fibonacci for that. And we could say if it's bouncing from here to here, the likely pullback area is probably going to be right around here. Generally between the 38 and 50%. So somewhere around here would be the pullback, like that. That's what I would be expecting. It's not exact, but it kind of gives you a little ballpark, something to aim for. So let's move forward and see what goes on here. Okay, so we're already heading to the target. That's actually kind of bearish. If we hit this before the market even opens, they're gonna flip bias and be bearish today. Like if they accomplish sweeping all this liquidity before the market even opens. Now, what time was that? 8:30? No, okay, that's 7:45. $9 is a 15-minute candle, so that's 9 to 9:15. The next candle is 9:15 to 9:30. Yeah. And they're already down here near this bottom. I was expecting them to open a little higher, but they did come down here and sweep this liquidity right here already. So they could just be bullish, or they could have flipped. I mean, this does look like they flipped, honestly. It's looking bearish. Maybe they didn't need to go all the way up here, which would make sense if they already have a short position up there. So up here, you see like these candles kind of line up here. So this is basically their original short order from the prior day, right here. We'll call that an order block. And then we see that we didn't break that again today. And then we went down. So this, not relevant. They might want to come up here and like sweep some liquidity from these, possibly. But it's probably just going to be bearish. So I would look to drop down now to a 1-minute chart. And then what I want to see is I want to see the price, see if it bounces up. I want to see what happens in the first 5 minutes. Okay. So we're going to go 1, 2, 3, 4, 5. Okay. So it is bearish. I was going to give it a chance to come up higher, maybe sweep this liquidity, and then get in there. It didn't happen. All right. So let's set our 5-minute range. So there's the 5-minute range. Now, it could just keep pushing down. You know, you don't necessarily get every day. Now, we swept this liquidity all the way down to here at this point. Being bearish, they're going to go down past this. So what we could do is we can set this as our profit target. And then now that we're bearish, we can actually project a bearish move. And we can project it. Yeah, we already knew we were going to be bearish, but let's see. Because of the higher time frame was bearish, kind of forgot that. So what we want to do is we want to project down from here to here. And actually, we want to just, let's verify this from previous days, actually. So we come back here to a prior day. We say from, you know, the swing high to the swing low. we get a profit target of 127, and then we ended up hitting it the next session, you know. Now for an immediate target that we would hit during the session, let's see. So we go from this swing high to this swing low. Okay, there we go. Yeah, we hit all those. Beautiful. Okay. And then from this swing high, no, from the swing high of the cash. Well, let's do from the overall. From the swing high to the swing low, we get a profit target down here. We haven't hit it yet, which means today might be the day that we hit it. So let's put that there, and this here. And then we have this one that we projected from something. Let's just move that back there. And then this one, what we want to do is we want to project it from cash session high, which is up here, and then to the pre-market low down here. And now this one right here, you see how it overlaps with like both profit targets? That's high confluence. Like there's a bunch of different time frames that are pointing to this as a profit target, as a destination. So that's good. This one is higher, it's closer, so I'm gonna leave that one. Now what I want to do is I want to look at just oh wait, I'm doing this wrong. Oh my gosh, I'm doing this wrong. My bad, my bad. I'm gonna delete all these and just redo them. I'm so used to doing it the other way for going long. The 0% actually goes there, and then this one goes there. My bad. All right, so let's mark these out. So this one did hit right there. That one got hit. This one did not. The extended target. Okay. So I want to see from this swing high to this cash session swing low. That's also a target. And from this swing low. Okay. Now let's go back and redo that from the other day as well. This swing here. No, nothing too fancy there. A little. So this one here from the cash session to the high, we get 127. It did hit it during the session. Oh, thank goodness. Got a bug. Hold on a sec. All right. So we typically aim for the 127% just because it's the most likely to hit. So here's what we're going to do next. We're going to get this, take it way over here to the current day we're trading. Bing, bang, boom. From the swing high to the cash session low is the most probable target. So this is actually closer than the other one, so we're going to drag that up here. This one actually puts it farther away. So that is like a profit target too. Like number 2. And I guess 2 like also. If we do this, the second profit target is actually here. The difference is 716 to 7680. Oh, hold on. All right, and what do we have next? Yeah, let's just go for that. What did the previous day's target say? Was there any overlap? Yeah, the extended target. So this is really the absolute best target right there. It's a target for both days. It's the extended target from the previous day, and it's the current target for the current day. Perfect. That sounds good. Now, if we were to go short right here, I kind of want to project these things out before the market opens. You don't have time to really do it while all this is going on. You want to project out all your potential targets beforehand, which is why I do my mapping the night before. Right here. So if we were to enter this short position and we put this back here, or even back here, like behind the protected zone, that's a stop of 228 points. That's big. The question is, how big is our profit target? Profit target is down here. That's less than a 1-to-1. So we would need to put it for 3-to-1. Three to one would be back here. That's not really safe. I'd say the safest place that we could do is back here. That's a 1.25-to-1. I don't really want to take that. I would like to see this bounce up. So might not take a trade today. Let's see what we get. 1, yeah, 2, 3, 4, 5. Now if we look over here, this is actually an area that didn't have a lot of trading activity before. Now they're doing some trading in it. Now there was some back here, a little bit in this zone, like right here there was some trading. And then it came down to here. It's sort of the same zone we're trading in right now. Okay, yeah, here we go. Let's see it pull back up into here. There we go. This is looking a lot better. All right, now what I'm going to do is I'm going to set this. You used to be able to say, update this and like you could step through in like smaller increments. Maybe that's only if you do like 5 or 15 minutes. Then you can step through in 1-minute increments. I thought you could step through in like 10 seconds or whatever. Now we've got a better chance here. Now we've got now we have a 2-to-1. We have a 2-to-1 if we enter right here. So we can take that if we want. That's acceptable. We're not guaranteed to come up that much higher. Now, if they are reversing the price here, they do this a lot though. It's like a manipulation thing. They'll come up here and then what they'll do is they'll fake people out and then make them cancel their stops and then they'll drop the price. All right, so I'm expecting it to turn around right here, potentially. So I want to see a reversal signal right here. Okay, so we got a wick right there. This lined up with that with a big wick. That's good. So right now, if we were to get in here, it's almost a 3-to-1 risk reward, and we'd have the stop all the way back here. Now it's 100 points. $20 point. That's $2,000 loss if we're wrong. Like if this was actually a reversal. Now we could see if this was a reversal. How far down did it come? It came down to here. This is the area where they rejected from. Like that. So that's actually, I call this an OB defense bounce. So they drop the price right into there and then bounce up. That actually is a very bullish move. The price is probably going to go hit that original target. So we missed the opportunity. I don't think it's going to turn around. We'll see though. It could. But okay, so it's kind of stalling out right here as we're getting next to the distribution phase. Um, let's see. What do we get here? There we go. That's what I want to see right there. That engulfed all of that. We'll do a pullback right here. From this to here. Get in with the limit order right here. With a stop loss. It won't let me set the stop. I want to put the stop right down here. This next candle better not like screw me over. Okay, so my stop loss is going to be right down here, right? So if we're bullish, then this won't get hit. If this gets hit, it's because this isn't actually a bullish move. And I mean, the fact that these things aren't breaking this kind of tells me maybe we are bearish. Like they're set up on both sides. And so this is this is why I don't like trading in accumulation phases, because they play both sides. Like this is not a directional market. They have been doing directional moves, but it's not as reliable, these signals. Basically, for the most part, the you just trade with the trend. Like it's going down, it's going down, it's going down, going down. I mean, we're $90 in the profit right now. I'm just gonna take that and then go with our original short position now because of these big wicks and where they're landing. Um, I feel like taking this trade is actually better. So I'm going to short right now. Nope, that's a long. I'm going to enter a short. I should have done the pullback thing, but I'd probably get tagged in too with the wicks. Let's go ahead and do that. Right here, let's put a limit order there and see if we get tagged in. Actually, let's try to get the best possible entry. That way, even if we're wrong, we give up less. So far they've wicked out. They haven't wicked that wick yet. They might not. They might not send another wick up. I'm going to put this down a little bit farther. Okay. Now we can move our stop loss behind this. This is the area that was defended before. So remember that we're in accumulation, so it goes up and down a lot, right? Up, down, down, like really quick. Down here and then up there, and then down here and then up there, and then down here and up there. Probably just to go down again. So I really hate trading in accumulation. Okay, so now that we got our directional move and we see we have massive displacement, we can probably start to bring our stop back to here. So we're not risking quite so much now. We want to bring it back behind the purple candle or the gold candle. So now we're only risking, let's say, 250. Oh my gosh. I want to risk 250. That's a nice even number. And it's way back behind that candle. We could actually tighten it up, but now we're above all the wicks. Like they haven't sent any wicks up there. So as far as any algorithms are concerned, there is no more liquidity back here, right? So they have no reason to go wick us out there unless they actually switch directions. So where do we want to take profit? We already wicked down to here. So odds are they're going to go past this now. That was just a manipulation move. So, yep, there's the first profit target. It's still in line with what we projected earlier. Um, oh, because it was like basically the same anchor points. Well, this wasn't, but you see how like even though we anchored like from here to here and now we're from here to here, it's still sending us to the exact same target. That's and we had this same exact target when projecting from yesterday. That's not a coincidence, okay? Like if the market was truly random, this shit would not align like that. So let's get our profit target, take profit, pull it down here. And we got one contract. We're currently up $2,185. Holy crap. Our for real? Our target is 317 points. Damn. I'm gonna lock in some of this profit. I didn't realize we were that far in the money. Let's lock in $1,000. Um, if we get stopped out and we miss out on another $5,000, I don't care. We got 1,000, right? That's worth something. Okay, but maybe it'll just keep on going because it's got momentum. All right, so now we're up to 32.65, and you see the candles are starting to get smaller. Like we're getting near something. It's kind of losing steam. So I'm going to bring this down a little bit farther to $2,000. Yep, right there. We hit this 50% mark, which is the bullish reversal point. It's like they got two accounts. On one account they're bullish, on one account they're bearish, and they just play with you. Right? They're just like, you suck. We're gonna take your money. So now at this point, you can say, do you want to stay in this accumulation phase and just deal with their fucking bullshit? And to that, I say, no, I'm gonna take my 27.35 and dip. And that's how you do that.